fill out annually for your LLC. So just, research your specific state. But in terms of the federal government, they're not going to require any sort of tax returns or taxes for the LLC. Great question. All righty. Okay, I'm gonna need some more questions here. What is an S corp? Well, okay, great question. I probably should have answered that anyway. An S corp, long story short, is a way to save on the self-employment tax. That's what an S corp is, at fundamental level. What happens when let's say that you're a sole proprietorship, or let's say that you've gone a step further. Let's say that you've set up an LLC, which is typically a good step for your business. But let's say that you've done that. You're paying a lot in tax. You're paying a lot specifically in the self-employment tax. The self-employment tax is 15.3%. It's a flat tax rate. And really what it is it's Social Security and Medicare taxes. That's literally what the self-employment tax is. So, of the 15.3%, the Social Security portion is like 13%, and the Medicare is the rest, something like that. And what happens before you become an S corp, you're charged the maximum amount of that, in the sense to where essentially every year up to $160,000, you're subject to the full 15.3%, up to 160 grand. Like, this is before you become an S corp. And then anything after $160,000, that's only subject to the 2% Medicare portion of the self-employment tax. The Social Security portion, which is most of it, it's like 13%, that caps out at $160,000. So as soon as you make that much money, you don't pay any more in the Social Security portion of the self-employment tax, but you still pay the Medicare tax above that. And that's unlimited. You pay that unlimitedly. What happens with an S corp, or the proper name for it is an S corp tax election. Your LLC, you create that with your state. That's how you form your business, with your state of residence. It's usually done with the Secretary of State. But then if you want to become an S corp, you make an S corp election with the Internal Revenue Service, with the feds. You file paperwork with them to be taxed under the S corp tax rules. And what that does, technically speaking, is that creates sort of an employee-employer relationship between you and your own LLC, your own business. So you remain the owner. You're still the owner of your business. You're listed as the owner in the company formation documents. But you are now, for tax purposes, you're an employee of your own business. And since you're an employee, your business will pay you a salary. It'll pay you a wage just like you receive if you work for someone else, and received a W-2 paycheck. But the cool thing about S corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary. The rest isn't. The rest is considered a distribution to yourself. You can kind of think of it as a dividend, like conceptually speaking. So for example, let's say that someone's making let's say $150,000. You're self-employed, you have an LLC, you're making 150 grand. And let's say that you make an S corp election on that. And let's also say that you choose to pay yourself, for whatever reason, $50,000 in W-2 wages. That's what you think, would be a reasonable salary for your situation. So when you do that with an S corp, that first $50,000 is now the only chunk of your earnings that's subject to the self-employment tax, whereas before it was all your money. So that first $50K, your W-2 income, that's the only chunk that's subject to that tax rate. The other 100 grand, or just the rest of your money, like outside of your salary, those are your distributions. And that chunk of money is no longer subject to the self-employment tax. So if, you do the math, it's a big chunk of change. It's 15K, like 15.3K that you're saving in the self-employment tax, if you're making that much money. And obviously, if you make more than that, you can save a little bit more, and if you make less than that, you'll save a little bit less. But generally speaking, that's how S corps work. If I bought equipment a couple years back, can I still write them off on this year? I wouldn't, because it's not a business expense that you made this year. What I would do, if you wrote it off a couple of years back, I would amend your tax return from a couple of years. Well, it depends on what tax structure you are. If you were just a sole proprietorship or just an LLC, then you only have an individual return requirement. And I would go back and I would amend your individual tax return for that year, and I would include this equipment expense or whatever you need to do. Equipment, you need to expense it. You might need to depreciate it. Whatever you need to do, I would amend that return. But I would go to a tax professional for this, like because if it's equipment, I'm sure it's expensive. That's a lot of money we're dealing with here, so it's important that you do it right. So I'd go to a CPA or a tax professional to amend the return. But keep in mind that if you do that, let's say it's um 20 what year are we in? 20. Let's say that you're amending 2021. You'd go back, you'd amend it. And so depending on what happens, that could cause a loss, depending on how much income you had for 2021. Like you could literally have a loss in your business. And if you have a loss, you can typically carry that loss forward to you know the next tax year, and continue to write off that loss against income. So, that you might have to amend another tax return. You might have to amend that, preceding tax return to do that. So it can kind of start a chain reaction of tax. So I'd go to a tax professional. Can you, Here's a good question. Can you make an LLC and transition it into an S corp, or do you have to start with an S corp, or can you start with an S corp? So there's a lot of people that have sort of I would say, a misrepresentation about what an S corp actually is. An S corp, the term S corp, it doesn't mean a business entity. It's not a corporation. It's not anything like it's not like an LLC. It is a tax election. It's a way to ask the government to tax your business entity in a certain way. So you either have to, one, have an LLC, a single member LLC that can make an S corp election. Two, a partnership, which means multiple people on an LLC. That's what a partnership is. It's a multi-member LLC. Partnerships can make an S corp election, and C corps, corporations that you set up with your state, C corps can make an S corp election. But the thing is, Collective recommends LLCs, and every serious tax professional that understands like a self-employed owner's situation, a freelancer, a consultant, vast majority of the time they're going to recommend to set up a single member LLC and then make an S corp election. And the reason that is when you form a corporation and make an S corp election, you have an additional administrative requirements with corps that you don't have with LLCs. You have to have a board of directors. You have to keep a corporate ledger and record meeting minutes from the board meetings. There's additional paperwork that you got to file. It's not fun, and it doesn't provide any sort of additional legal protection than an LLC does. Like your assets are separated and you're protected with an LLC just as much as you are with a corporation. The only reason why you'd want to go the corporation route, and if you made an S corp election, is if you ever wanted to go public. Like if you ever wanted to issue stock in yourself, or stock in your business, or list yourself, have more than 100 owners in your business. So with an S corp, you can only have 100 owners. So if you ever wanted to do that, you should consider setting up a corporation first. But that just doesn't apply to a vast majority of people. Okay. I don't know where that came from, but there you go. All right. Can I still write off my rent with an S corp? Yes. And you're so welcome. Thanks for the excellent question. But yes, you can still write off your rent with an S corp. Absolutely. Just like you can write off all kinds of personal expenses when you have an S corp. You can write off a portion of your rent if you have a home office. You can write off a portion of your cell phone bill, your HOA bill, your cleaning bill. There's all sorts of things that you can write off, and it's certainly still possible with an S corp. But how it works with an S corp is that there's this sort of mechanism called an accountable plan, and what that is, it's essentially um, a reimbursement. So let's say that you have personal expenses that you use for business. What the S corp would do is they would actually reimburse you for those expenses. It would, part of the way that it would pay you back for those expenses, it could write off as an expense for the business. And it's not taxable to you personally, obviously, these reimbursements. So it's a little bit more complicated, the bookkeeping surrounding that when you have an S corp, but it can still be done. But that's just why it's important to, when you have an S corp and when you start getting these more sort of complex tax and business structures, it's important to have a tax professional that can help you along and make sure things remain organized. At at what point would someone want to form a C corporation? Well, there's a couple reasons why I hear from self-employed owners why they do it, and just from other tax professionals as well. So one is some people have the perception that it gives you increased legitimacy. When you have a corporation, you're able to have an Inc. Next to your company name. You can't have that with an LLC. You can only have limited liability company, LLC, abbreviated, typically for that. But for a C corporation, you can have Inc. or comp or co or things like that. And there's some business owners that think that gives them more legitimacy. But honestly, my own personal opinion, what gives your business legitimacy is how well you run your business. You know, I don't. At the end of the day, I don't think people really care about your tax structure, your business structure, or whether you have ink in your name. If you do a good job for your clients, um, then your business will do fine. And in my opinion, it's not worth it to jump through those hoops, um, just to have that ink after your name. Ooh, okay. You mentioned earlier that you can carry forward losses for your business. Could you expand on that? Yeah, in certain situations, you can carry forward typically a loss. Now, the only exception is that, like, let's say that you have an LLC and you're running your business year to year, and one year you have a $20,000 loss. Usually, you can carry forward either a portion or all of that loss to the next tax return and continue to write it off, against your income. So you can certainly do that. Now, the only where it gets a little bit messy is when you're transitioning from an LLC to an S corp. So let's say that in 2023 you have a loss, and you're thinking about you think you'll make a lot of money in 2024, and you want to save on the self-employment tax. So you think make becoming an S corp for 2024 might be a good idea. You typically can't write off a law. You can't typically carry forward a loss from your LLC to your S corp. So that's the only thing to keep in mind about losses. All right. Can a partnership become an S corp? Yeah, a partnership can make an S corp election, and really all a partnership is a multi-member LLC. It's two or more people on an LLC. That's literally what a partnership is. And If you don't make an S corp election on a partnership, it has its own tax return. Actually, it's called Form 1065, and it's literally a partnership tax return. So if you don't become an S corp, then you file that return, and it's a pretty complicated return. There's a lot of information on it. So keep that in mind. But yes, you can make an S corp election on a partnership, and as soon as you do, you have a different tax return. You have the S corp tax return of the um, instead of the personal tax return, or I'm sorry, the partnership tax return. Oh, here's a good question. Hello, I currently use bench.co. How are you guys different? Well, I guess I would say I speak to part of my job at Collective. I'm a business advisor here. So my entire job is, speaking to self-employed, individuals all day about their situation, about their business, and I'm trying to determine, whether or not Collective would be a good fit for them. Because we only want to sell you a service if we can actually benefit you. If we can't save you money, if you don't need to be an S corp or anything like that, then we give you referrals. Say, hey, Collective's not quite right for you now. You need a little bit different service. We would give you some referrals for that. But if I determine that Collective would be a good fit for someone, I sign them up to the service. And to be quite honest with you, I speak to a lot of people that come from Bench that are scheduled on a call with me or one of my colleagues. And they say that, first off, what I've noticed is none of the people that I've spoken to from Bench have been S Corps. And all of them needed to be an S Corp. They were in the income level to where they saved thousands of dollars by becoming an S Corp. But when I would speak to these people from Bench, Bench, for whatever reason, didn't make them into S corps. So it was causing them to leave thousands of dollars of the self-employment tax on the table. So that's one thing that I would be kind of a little bit. I would keep that in mind. But also, I've also heard that the interaction was limited with Bench. It wasn't as in depth as they were expecting. So those are the two main things. And at Collective, we handle everything for you. First thing we'll do is get your business set up, if you don't already have it set up. And so that's the first step. Get your LLC set up, make your S corp election. And then from there, we'll handle your payroll, because you yourself will now be on payroll with this new tax structure. We'll handle your quarterly estimated tax deposits and take over your bookkeeping. Because as you grow your business, as you make more money, it just makes sense to hand that off to a professional. So, every month we'll give you all your accounting reports. We close out the books every month. And then also as well, you have someone on your team called a member relationship manager. And you kind of think of them as your account manager. They'll serve as your main point of contact and, kind of help you through any, tax questions you might have or support you might need throughout the year. And then at the end of the year, we'll file your S corp tax return. So that's important, obviously, when you have an S corp. So anything tax wise that needs to happen with your business, we'll handle. And to answer your question, I think we just go a lot further than Bench and provide a more comprehensive service. Is there a certain income threshold as a freelancer that I should become an LLC? No, the income threshold only really has to do with whether or not you should make an S corp election. But whether or not, to set up an LLC, you should do that, pretty much as soon as you can. Regardless if you expect to make a bunch of money, at the start or not. It's just better to go ahead and set up your LLC, get that separation between your personal and business assets so you can, better run your business. What income level threshold for an S corp? At Collective, we say $60,000. If you're making at least $60,000, that's when it's worth it to kind of have the conversation on whether or not you would want to be an S corp. Chris, thanks so much for your question, and thanks so much for coming to us in January. But that actually brings me to something I need to bring up. I wouldn't wait until January to schedule a call with Collective and get started. If you're interested in Collective, I would go ahead and schedule a call with a business advisor like myself. And you can do that. Please send us a message on LinkedIn, on Instagram. We'll get you scheduled with somebody. But we're actually running a Black Friday sale at this part of the year, to where we'll waive your onboarding fee, your $199 onboarding fee, and your first month fee. So you can essentially get started for zero down. And the reason we do that is because it kind of helps, near the end of the year, when you get closer to January, demand spikes big time. So it's a good idea to get in line, kind of, let us prepare for 2024 so you can go into 2024 getting started. So, but the reason we do that is, we encourage people to go ahead and sign up now for 2024, and we offer that first month free, waiving the onboarding fee, just to make it an easier transition going into the new year. So please, schedule a call. We'll talk, how Collective could benefit your business, and whether or not you even need to be an S corp, and we'll get things going. But that was so enjoyable, like it always is. Thank you guys so much for the excellent questions. I wish everyone the best of luck on their business, and I hope to maybe speak to you in a call if you're interested in Collective.